Hello, ladies and gentlemen. Welcome to the Monday Morning Minute. It is Cinco de Mayo, 2025. I wish I knew how to say 2025 in Spanish. I probably could have looked it up, but I didn't. My kids would be very, very sad. They're 5 and 6, by the way, and they could probably say that number. But I digress. U.S. stocks were solid again last week. We had the S&P making one heck of a ramp in terms of roughly 3% to the upside. All of that was really driven by marginally decent data. Also a solid jobs report toward the end of the week, keeping unemployment stable right around 4.2%. With inflation pretty darn weak at the moment. This is a moderately dovish readout on data for the Fed, which is reporting this week. We're going to get an idea on what their game plan is for potential June rate cuts. Right now, it looks like a 98% chance that doesn't happen according to the bond market, but the bond market has pulled forward a cut and is projecting 3 rate cuts toward the latter half of this year. Moving along, we saw yields drop a little bit across the yield curve, stabilizing from some of the volatility in previous weeks. We also saw international and emerging market stocks up just a tiny little bit last week. Generally speaking, only the hedges like gold and silver, precious metals, were a little bit more volatile than they have been last week, but that is logical considering the bullish move that we have seen in stocks over the last 3 weeks or so. Remember, hope is not an investment strategy. Have a fantastic week.